Welcome to another episode of Lunch with the Shark. Join us as we dive deep into discussions about business, accounting, and finance to help you build a business that thrives. Now sit back and have a bite with your host, the Shark CFO, Vidal Espinosa.
Well, hello. Good afternoon. Welcome to a new edition of Lunch with the Shark. I am your host, Vidal, the Shark CFO Espinosa. And Captain Crunch was around here. He's actually back there, our co-host of this week. Captain Crunch, what's up? Here, dude. Nope. He is actually he's so funny because he wants us to open the door between the breakfast room and look, like there he is, and the patio. And what he does is that he naps in between the patio and the room. So his head, it's outside, his body is inside because he's very busy chasing birds, chasing other dogs, our neighbors' dogs, and he's extremely busy. So today he's actually resting. He's had a very hectic morning this Friday morning. So how's your day been? How many wins have for the Friday? Us, amazing, always positive. There's some negatives, but negatives can turn into positives. Remember, I'm gonna say very nerdy, but negative times negative makes a positive. So remember, negative times negative makes a positive. So every negative counts towards making positives. And a couple of days ago, well, actually a couple of weeks ago, one of my computers gave in, and I tried to stretch it as much as I could. Unfortunately, I couldn't. So my main computer gave in. And yesterday and today, I've been working on migrating all my Outlook, because I don't have my Outlook online, actually on my computer, and it's downloaded straight to my computer because it has very sensitive data. Even have a lot of firewalls and things like that. I don't know, but we hire experts on doing so. And I'm actually my Outlook information, a new desktop that I had, and we're shifting all that. But just imagine, it's been 2.5-3 days that I haven't been able to focus fully on things that I've been doing, is just trying to clean up and things like that. But nevertheless, that is really good because I am doing a lot of cleanup. I am purging my emails. I'm purging the lists. I'm purging files. So it's good. It's good. We have no files in our computer. Everything is in the cloud. Everything is secured. Everything is protected. We actually back up our cloud on a weekly basis, and we have a little thing like this, which is amazing. You can get it on Amazon. It's like $150, and we back up that every week. It's backed up. Actually, no, every day our cloud is being backed up. So if something was to happen to the cloud, we would only be 1 day behind. That's nothing. That is something that I can live with. My team can live with it. It's just 1 day, sorry. What are you doing to protect the data, your company data? It's very important. We actually have a Lunch with the Shark that just talks about that with my very good friend, Jose Luis Villasana. And he spoke to us about that. Remember, that is a necessary and ordinary expense for your business that can be deductible. So let me just touch a little bit about that. The the main objective or the main way for you to consider or make your expenses or investments for your business, they must fall under two premises. The first premises, and actually it's the first text on what's could be considered deductible from the tax code, the US tax code. And it says that any expense that it's ordinary and necessary, both ordinary and necessary for the performance of your business. And let's go a little bit into explaining what it's ordinary and what's necessary. Ordinary is all the investments and expenses that you have to do pertaining your industry. If you're a doctor, you're going to be able to deduct prescription medication that you probably give to your client, to your patients, emergency room expenses, things like that that are related to your profession, to your industry, to what you deliver and provide in services. Now, if I'm an accountant, I am not going to be able to deduct medication because I actually don't prescribe or give medication, pharmaceuticals, to my clients. Sometimes we provide them some Advil, Tylenol, or anything like that because it's hurtful for them to hear the news. Yes, it's very painful for them to hear that, holy shit, you did not plan and I'm paying $1,000 in taxes. Ah! Well, if you come to me the day off, I'll have a full bottle of Advil for you because the pain is going to be unbearable. But if you've been our client for the last 12 months or prior to the closing of your tax or fiscal year, you are not going to need that tub of Advil or Tylenol. So that expense, if I were to give you as a gift, that Advil, it could be deductible. But since it's not related to my business, it's not deductible. Okay? So that's what ordinary means. Now, necessary, it's any expense or investment that is going to help you grow, deliver, perform, do your business or your product. Okay? So instance, we are doing some marketing, right? So that's a ordinary business expense. But let's say that we were to hire an airplane or with a banner. That's marketing. It's necessary in my point of view and explanations, okay? That expense with my logo, our webpage, blah, 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 it's necessary for us to grow, right? Now, you need to be very objective when it comes to the necessary piece of it. Taking your clients or taking a prospect client to play golf, it's not a necessary expense. Okay? There, we have to look to each item, each concept, okay? So based on the tax code, we can classify and apply it and make it either deductible, non-deductible. Remember this week, we spoke about you're not supposed to care whether this expense is deductible or not. To a point. If this expense, regardless of whether it's deductible or not, it's going to help you grow your business, guess what? Do it. Guess what? Do it. Again, guess what? Do it. Okay? Because the return on investment on that non-deductible possible expense, it's higher than what you're going to get in revenue. And then in turn, those other expenses associated to your delivery or sale of the product, they're going to become deductible. Okay? So when in doubt, what I recommend people to do is grab the product or service that you're trying to buy and objectively ask yourself the question: is this purchase, expense, investment an ordinary expense for industry? Yes. So you have 50% already. Now, is this purchase, investment, or expense a necessary expense for my business to be growing, moving forward, or delivering the service or product that I offer? If you answer yes, utilize, remember, my wallet, where the side where my ID is, it's my personal credit cards. The side with no ID, it's my business. So that's going to help you and say, okay, you know what? This is a business expense, so I use this side. If I question about it, go ahead and pull out my personal, pay for that. Okay, take a picture. If it's over $75, I'll save the invoice, the receipt, the credit card slip, whatever, blah, blah, blah. And then I'll send it to my accountant and say, hey, this is an expense that I did on my own. Would you be able to help me classify it and see whether it's a business, necessary, and ordinary expense based on my explanation? Your logical explanation, it's going to be totally different than my logical explanation and any auditor from the IRS or the state explanation. Based on that, we'll determine whether or not to run it through your business. If so, we'll reimburse you. Plain and simple. You're not out of money, okay? We'll reimburse you. Your company will reimburse you. Only if your accountant, your tax advisors, your tax attorney, your attorney has prepared an accountable plan according to the Internal Revenue Tax Code. It has been executed, signed by every single member or shareholder or directors from your company. Consult with your tax advisor. We actually, as part of the creation of your entity, we include that. We actually include some tax planning that it's going to help you in the long run, like I just told you. We actually include an accountable plan that it's going to help you in case of an audit, because the IRS is going to ask you, hey, do you have an accountable plan? Here it is. Okay, so any check written to you that it's outside payroll, it's a reimbursement. Deductible or not, but it's a reimbursement. Okay, so make sure that your accountant, advisor, tax attorney, legal team have considered and included, or you have signed an accountable plan. Jesus, please type in there, accountable plan. It's very important for you to make sure. If you have one, call us. We'll help you. We'll probably give you a template you need to review. It's just a template, okay? It has to be tailored to your company, name, blah, 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 blah. Call us. We can help you. The phrase of the day is accountable plan. Okay? So, to finalize this week, we are going to try to debunk the tax deductions myths. And I say myths because my comadre, compadre, my friend, my coworker, my neighbor, my house cleaner are telling me that I can apply those deductions in my tax return. Ta-da! Guess what? Nah. They don't. Some of them are not going to apply. Some of them don't even exist. Yes. Open a business so you can deduct your house. I've seen like people try to deduct their mortgage as rent. Cool. Do it. Amazing. Try it. Go ahead. Yeah. But when the IRS audits you and you try to justify that your whole house, it's your office, I hope you're ready to pay those fines, those penalties, those interest, back taxes, and or if it's a huge amount, you're willing to go to prison. Many times as a business owners, we hear that everything, yes, everything in our business, it's tax deductible. That's what we hear. Oh, yes, open a business because everything is tax deductible. That's not true. I just told you, necessary and ordinary. I want to drill those two words into your head. Necessary and ordinary. Be objective. Think objectively, not in your favor. I know that anything that it's against you, it's towards you, but it doesn't. It's not personal, okay? Think objectively. Think as if you were not the owner of the business, and you were actually outside the business. Does it make sense? Yes, I said it. Let me go and buy 10 Armani suits because I have to go to the office in suits. Perfect. Buy them, but with your own money, not with the business. The IRS is going to come to you and they're going to say, well, Mr. Espinosa, you bought 10 Armani suits. Perfect. That's like $20,000, $25,000 or so, right? But they're not tax deductible. And I'm going to tell them, but why? I have to be in suit every day to be presentable with the clients. Yes, Mr. Espinosa, but if you can wear those suits outside your business environment, they're not uniforms. They're not considered a business deduction. But I have to. Yes, we know that you have to. But it's not that you have to. It's your choice. Now, if I wear this polo shirt, okay, and I actually embroider my logo here, Invictus Advisors, okay, actually, this polo shirt have been a business expense, tax deductible, up to an amount, not $1,000 polo shirt or $800 polo shirt, up to an amount. Because the IRS would consider and say, well, actually, you cannot wear this outside your business environment. And my rule of thumb is saying, can you wear this to a wedding? Well, I would not wear this polo shirt to a wedding, even if it was in the beach, wearing my business logo. It was like this, maybe I could. So it's acceptable. Okay? So the IRS specifically say that you can only deduct things that are necessary and ordinary for your business. Office supplies, yes. They're deductible. My Gucci shoes are not deductible. They're not deductible. I can actually walk into the office barefoot. You don't need shoes. You want shoes. You're used to wearing shoes. You can actually go to any store and get any shoes. But you use shoes every day for everything. So they're not deductible, right? Even if you're using them for marketing, they're not deductible. Period. Even if you say Gucci shoes are part of your uniform, it would not be considered deductible since you logo, it's not on it. They're not. And I don't think you want to put your logo on a pair of Gucci shoes or Ferragamo. I wouldn't. Few realizations are more painful than realizing that you forgot to include a tax deduction that will have lower your tax bill or increase your tax refund on your tax return. So I'm going to give you 3 tax deductions that you shouldn't overlook. The first one, if you have kids, paying the babysitter. Okay, don't pay the babysitter through your company. Okay, pay the babysitter. It's a personal expense. You might be able to deduct the cost of the babysitter if you're paying her to watch the kids while you work. looking for work or a full-time student. It's deductible. Now, you don't need to put them on payroll, but you have to give them a 1099 if you're using your company. Okay? Lifetime learning. That's a great tax credit. If you pay for online courses, you may be able to deduct these. Now, they have to help you run your business. Hey, Captain Crunch, have you decided to join us this afternoon, Captain Crunch? Okay, no, he's busy. So, check with your tax person to see you can maximize this benefit. Now, again, if you are expanding your tools and your knowledge to run your business, it's deductible. Okay? Books, the same. If books and you're not making deductible, you can make them deductible. Have your business buy you those books. Have your employer buy you those books. Okay? And your expenses. If something is used to benefit business and you can document the reason for it, you can deduct of your business income. A junkyard owner might be able to deduct the cost of cat food that encourages stray cats to hound and keep mice and rats away. That is actually not a necessary expense, believe it or not. If it's logical, reasonable, a considerable expense, you can deduct it. And let me tell you one thing. Several years ago, we had a professional model. She was being audited because she deducted close to $2 in clothing. Okay? And you're going to say, shit, a lot of money. Yes, it is a lot of money. $2 million in clothing. Well, our argument with the IRS was business model, right? She's a professional business model. That's her job. Now, every time she goes out in public, she has to look as if she was in the catwalk. Based on arguments and documentation, evidential stuff and things like that, those $2 million or $2 million were made or allowed to be deductible. Okay? Because it was a necessary business expense for her to continue her persona. Every single person in the model industry, entertainment industry, they have to the appearances. You know that. It's normal. They have their alter ego, their alter persona, which is their entertainment, and they have to deduct certain expenses. Musicians, performers, they can actually deduct whatever they wear on stage. You are supposed to not wear it outside the stage and things like that, even like your vehicle. If you're deducting your car in your business, you're actually allowed just to deduct the percentage of time that you utilize that car for the business. Okay? That's what the code says. Now, I want to play a little game with you. Here are 3 examples, and I would like you to tell me if they are tax deductible or not. So we're going to play a little, we're going to do a little exercise that is going to help you move that little hamster inside your brain, that little hamster, and see if you caught the idea. Was a parent able to deduct the expenses for clarinet lessons for her children because she claimed corrected her child's obedience? Guess what? If you said yes, right. This was based on a 1962 case where an orthodontist argued that playing the clarinet helped correct child's overbite. That's a medical issue. But this orthodontist had an accountant, had a tax advisor, had a tax attorney. The owner of a dairy took a trip to Africa to conduct research on wild animals. Was he able to deduct the trip? I wish Jesus would have been able to have, he didn't know, the Jeopardy theme song, so we could have played it. But if you answer, it was deductible, you're right. He successfully claimed it as a business expense because it was related to his business. He owned a dairy. He actually went to do research on wild animals. That is a legitimate business trip for research and development. He could have also gotten a tax credit on top of the tax deduction. Double. In 1994, one stripper attempted to get more tips, led her to undergo breast augmentation surgery. She then proceeded to deduct the expense for her on her taxes. Did she get the deduction? Well, just figure out, imagine this or whatever song you want there. If you answer no, how could she have deducted her breast augmentation surgery? You're wrong. She was able to deduct it. A tax court judge ruled in favor of the stripper, stating that the implants were a stage prop and through a legitimate work expense that can be deducted. Interesting. Let me tell you one thing. In this exercise, I quoted it 3 tax court cases. On top of the tax code, the Internal Revenue Service or the state's tax code, you also have to look into any rulings from the tax courts. The tax courts have set precedent and they tell us whether or not certain deductions can be taken for your business. They are full of information. They are full of knowledge because guess what? You are not the first person that might have had that question be asked, is it deductible or not? So we go to the tax rulings, the court tax rulings, cases, and then we figure it out. We analyze those tax cases, and then we say, oh, based on this, we can deduct it. We are sure that we can put it in your tax return, and in case of an audit, we can fight it if we cite this tax court case. But you would only know if you have a good tax advisor or tax accountant. Due to popular demand, we are doing an encore of our webinar, Negocios Sin Fronteras, Cómo Iniciar un Negocio en los Estados Unidos, in Spanish. Next Thursday, October the 8th at 11 a.m. Pacific Standard Time. Remember, we're in San Diego. Hello. This webinar, it's all about open business in the U.S. Anywhere in the world will help you open your business in the U.S. You can sign up at invictus-advisors.com/webinar, and we can sure help you, give you information. We're going to give you a lot of nuggets. We're going to give you certain steps. Please don't try to do it on your own. It's very important that you consult with an advisor, with somebody that it's ethically and morally correct. Please, please, please. And those people out there giving advice, don't. We actually had a very, very bad experience with a Wells Fargo business banker that actually provided legal advice directly to a client of ours. She has the recordings. Legal advice, it's only for attorneys that are licensed on that state. It's actually illegal to provide legal advice. We don't provide legal advice here. We actually comment based on our experience. Any legal things should be consulted with an attorney, which we always have an attorney in our staff. We have an attorney that will help us determine and look into all the legal chingaderas for you and your business. So this lady actually advised our clients on legal issues. Don't do that. Don't try to do that. Please consult with an advisor. Consult with somebody that is knowledgeable, not with your comadre, your compadre, your friend, your neighbor, your coworker, your son, your mother, your kid, your wife. Those are not advices. That's opinions. Okay? And those opinions, we are going to take them and you're going to tailor them and you're going to say, oh, this fits me. This fits me perfectly. But it might not be the case. You might not need an LLC. Oh, they told me that to open an LLC. Why? Give me the argument and the foundation as to why you need an LLC. What makes you determine, or what makes you an expert on determining that you need an LLC? They told me. Who? My compadre told me because he opened an LLC. That happened to me yesterday. You don't need an LLC. Your business requires to be a corporation. Attorney, is that right? Can you please explain or give us the information? Blah, 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 blah. You need a corporation. You see? Somebody that is knowledgeable should do that. Or don't try to copy the other business that it's similar to yours because they're in the same industry, similar to yours, and try to open, oh, they're an LLC, I should be an LLC. You don't know. You don't know. There's a lot of things that. So send in your request. At this point, I think we have very limited space. I don't know. We're gonna, if you can't join us or if that's already enough, the spaces are full, we'll open another webinar or send us your information and then we'll get a hold of you and then we can do a one-on-one, something. We'll figure it out and we'll make it work, right? Make sure you sign up early. Okay, so we want to make sure that you are getting all the updates on YouTube when we go live with Lunch with the Shark. So make sure you subscribe to our channel, please. To do this, search for Invictus Advisors in the search bar at the top of YouTube. There's a video. Click on our YouTube page. On the right-hand side of the page, click the red button that says subscribe. You will not now get notifications about all the videos and episodes of Lunch with the Shark that we upload to YouTube, which are every Lunch with the Shark. It's there. We have a humongous library. I think we are at the episode 100 and what, 50, 100 and I don't know, but there are a shitload. Believe it or not, this started it as a let's see what happens project, and it's 100 and something, 150, 160 something, and it's been such a trip. I love it. I'm actually looking forward for 12 p.m. so I can be live and talk to you. Sometimes I know I say stupid things, but believe it or not, those stupid things help me. I sometimes hear myself, oh, episode 148. I stand corrected. Thank you, Jesus. 148. Sometimes I listen to myself and I say, fuck, why am I saying it and I'm not doing it? Why am I saying it and my team is not doing it? Why am I saying it and you guys are not doing it? So do it. It's been a great day. It's been a great week. It's been a very hot week here in San Diego. And I want to end up today's Lunch with a Shark with a quote from an American stand-up comedian and television personality, Jeff Foxworthy. And he said, if your biggest tax deduction was bail money, you might be a redneck. It's supposed to be a joke, okay? Don't take it personal. It's been great talking to you. It's been great seeing you. Relax, decompress, purge. Take this weekend for yourself, for your family. Enjoy your house, enjoy your family, enjoy your friends. Don't do anything business related. Purge, decompress, relax. Everything is kumbaya, peace and love. Bon appetit, ciao.
Thank you for listening to Lunch with a Shark. If you would like to set up a consultation with the Shark CFO, Vidal Espinosa, visit his website www.invictus-advisors.com and don't forget to subscribe on Facebook, Instagram, YouTube, Twitter, and LinkedIn.